The last hour of trading for the New York session, or final hour New York PM session. Here's that 4027.75 level, and the macro that starts at 250 to 310. That means there's going to be a move that begins there. It's up in a premium. It's going to seek what? Discount. Here's your price low in that run. Equilibrium would be right in here. So right below that low would be nice. Interestingly enough, it trades down into that and retraces back up into the bearish breaker. This breaker is the one I showed you at the beginning of the video, and we're extending it obviously across the entirety of the trading day. So we have this break lower, swing lows taken, trades back up into this candle right here. That candle's high is the exact high of that one and that one. That is institutional order flow entry drill. All it has to do is match that price. So you could be a seller at that candle and that candle, looking for a price run below that low here and that low over here. Relative equal lows here. That's where sell side resides. And again, we have the opening range gap low over here, which is previous settlement price on Friday. And then we have, again, repricing to that inside the last portion of the final hour of PM session trading. Let's go back into the details here. Trading back up in that bearish breaker with also institutional order flow entry drill after hitting the 4027.75 level perfectly. That's a nice short here. Volume imbalance, if you missed it, it trades back up into it there. Breaks lower. We have a wick. This is a discount wick that's going to act as an inversion level. So think of like support, broken term, resistance the real way. Then we have SIBI here, sell side imbalance, buy side inefficiency, which is a fair value gap, and I'm classifying it as what it is, a SIBI, S-I-B-I, sell side delivery. What's it inefficient on? Buy side. So we would expect price to deliver up to it. And look at that. Wouldn't you know it? It goes right to the tick price. Don't take my word for it. Measure that. Go in your time frame and measure the low of that candle to the open. Midpoint of that, 50%, draw that out in time. That's exactly where it goes. Inside of a bearish breaker. We have buy side here. We have a high, low, higher high. That last down close candle. Extend it forward. We have a SIBI and a consequent encroachment on that wick. Boom. Delivery. Perfect. Price breaks lower. Last up close candle prior to this displacement is a bearish order block. Trades up into that once, twice, gives up the ghost, and again, one more time, repricing back down into the opening range gap low for a final hour New York session trading opportunity. Just a beautiful PM session. This one here is like a centerfold. Also notice, again, we're trading above, right here, above that New York midnight opening price. Short at the breaker, short at the breaker, short at the volume imbalance, breaks lower, below this low here. So there's displacement. So now you can use what? You can use the 2022 model, which would be high to low, equilibrium. Here's your fair value gap. Trades up into it there. What's it going to aim for? Sell side, relative equal lows, and or the opening range gap low. And then boom. Just wonderful technicals. Just really, really nice to see algorithmic theory delivering as you see it here. Hopefully you found this insightful. Until I talk to you next time.